The stock market had a little bit of a pullback this week following last week's incredible rebound. Is this just a pause before we continue that follow through that started last week? Or are we setting up for the next leg down? In this video, we're going to go over SPY. We're going to go over the Qs. I also want to take a look at the weekly charts and just identify some key support resistance levels that you can take with you into the week ahead. So let's go ahead and dive into the charts right now. This is a quick review. We had the double top that took place over December and January and into February of this year. We have the downtrend that's currently in place. That is a significant downtrend. But the other thing that we also have going on, and it's worth mentioning, is that you'll notice when we bounced just recently, we didn't actually touch this declining trend line. Instead, what we saw, and we see this oftentimes with very euphoric stocks, where stocks are going parabolic or really trading with a lot of momentum on its side, the trend lines start to steepen. It creates new trend lines in a shorter time frame, and that's actually what we're getting right here with SPY. So if you go back to the highs that were created in March, you actually can see where this trend line has flattened out some. So this trend line, and it was tested here in early April, and it was again tested this week here on Monday and Tuesday this week. It has rejected price each and every time, and it wasn't really noticed until we saw that rejection this week. So now we've pulled back off of this declining resistance, and of course, like I said, this resistance will also still be intact. But what makes it important going forward is the fact that if we break through this resistance, we still have these two other layers of resistance that includes the AVWAP and the one that goes off of the all-time highs. So we're not out of the woods just yet if we're breaking through this shorter term resistance level. Now, another thing I would tell you, clear all the lines off, notice how it's not perfect, but there is some tracking to this 20-day moving average. That's this green line right here. It's pretty thin. It's a little squirrely, but there's the bounce that we had in mid-March died out just around that area. And then when we had this 3-day rally that took us into April, it also rejected it again. Now, we got pretty close to it, and then we rejected it here this week. And then even on Wednesday of last week, when we had that mega rally off of the lows when the tariffs were paused, it got pretty close to it, but could not break through. Looking at it from a weekly standpoint, you have this 5-week moving average holding on pretty strong. We cannot seem to break above that. That's this yellow line right here. It continues to push back on stocks. We opened above it this week, but we finished below it by the close. That's the second time we've done that. We did that back in late March, couldn't hold the opening price that week above that level. Instead, we dropped it back down below it. So right now, this doesn't look like an overly bullish chart for me when you're looking at it from a weekly. We had this 1 week of a reprieve, and it was on incredible volume, but it doesn't look like we're out of the woods yet. It just looks like another relief rally in the midst of a much bigger, much longer extended sell-off. Now, I'm not just being uber bearish here. I'm not. But this past week wasn't necessarily a great sign. The one thing that the bulls have going in favor is that at any moment in time, you could have a big headline event that does send prices right back up. Maybe not to the all-time highs right away, but it could send it back up into the mid 500s or even the high 500s, closer towards 6, to get the bulls back off the sidelines. That could happen, especially if this tariff war just suddenly goes away. Looking at it on the Qs, we'll start with the weekly as well. Again, you see this 5-week moving average continuing to push back on price. We opened above it this week. We closed back down below it. That tells me there that the bears still have control of this market. If you look at it from a daily standpoint, what we have going on here is still we have the AVWAP line that's pushing back on the Qs. Plus, you have this declining resistance where it was tested. So we don't really have a steepening of the trend line. It was already steep to begin with, so there wasn't that going from a flatter trend line to a steeper trend line. No, it pretty much just kept the same one, tested it on Monday and Tuesday, and rejected it. So this is pretty much the same trajectory that SPY is now on. And then you have some resistance that goes across. This is price level resistance. And yes, it dipped below it here on the 31st of March, but it closed back above it that same day. So it held, and then it finally broke down. So when support breaks down, what you'll oftentimes see is that support become resistance on the retest. We retested it with the declining trend line on this yellow line right here. and then we've sold off ever since. So we had a couple of days where we tested it, and then we fell right back down. Also, when we take all the lines off, the 20-day moving average on the Qs, on the daily chart, this is also acting as resistance in a similar fashion that it did with SPY. You can see where on 4-2, we rallied up to it, we sold off. On that huge rally that took place last week, we went right up to it, did not go any further. That's pretty substantial too, because remember, I mean, Qs went from a low of 415 and closed the day at 466. But as soon as it got, nothing seemed like it could stop it until it got to the 20-day moving average. And then we reaffirmed that resistance with a test on Monday and Tuesday of this week, and then it pushed lower. Volume has been pretty light this week. Some of that has to do with the fact that it's Good Friday, but it did pick up some as the market started to sell off yesterday and into today. And let's take a look at the VIX. If we look at it here from more of a longer term standpoint, you have this white line here that has had a difficulty in breaking through or sustaining a move above. Looking at it from a weekly chart probably makes the most sense, so we'll do that. But yeah, on the weekly chart, it can never sustain a move above it until just recently. So this was definitely a changing character for the VIX. Now, it has since pulled back, going all the way from 60 to being cut in half down to 27. This is where we're at a point here where it wouldn't surprise me if we start to see a reacceleration of movement to the upside in the volatility index. And finally, my favorite indicator, the T2108, got a much needed bounce here today, up 23% back to 18. That gives it a little bit of room for the bears. If they do decide to push it down next week, it won't necessarily send it right back into the single digits right away, where that becomes an extreme oversold reading. And we also have some new headline risk that's been introduced into the market just today. And that's between Trump and the Federal Reserve, particularly with Jerome Powell. Now, we always knew that there was a little bit of tension there, but Powell is starting to be publicly viscerated, I guess. Is that the right word? I'm not sure, but let's just go with that word. He's being criticized by Trump publicly now and saying that he might be potentially fired. Now, Jerome doesn't think that there's a case against him. However, we all know how this all works out. The drama sometimes itself can create more havoc than the actual outcome that proceeds from it. So the market doesn't really like the idea of Jerome stepping down. He's probably been good for the markets in the way that the market likes the free money being sent its way all the time. However, that could introduce a lot of volatility into the market, especially if Jerome starts to take things personal and wants to try to stick it back to the president. Things could get really messy, and the stock market could be the loser in all of this. And now I usually end these videos with thank you and God bless, but I want to take it a little bit further today. And I want to just express to you how important Jesus Christ is in my life. There's a reason why I say thank you and God bless, because the Lord has blessed me immensely in life, and not necessarily via money or lots of, I'm not of any kind of like mega rich status or anything, but far different. And that is through the blood and the atonement of Jesus Christ on the cross. And that's what we're celebrating tomorrow, and how important and how vital that has been, because without that in my life, I have nothing else. Absolutely nothing else matters. And it's because of his atonement for my sins that I can actually enjoy a personal relationship with God. And I would hope that for the same thing for you, that you can enjoy that as well one day. And if you ever have any questions, feel free to email me about that. Ryan@shareplanner.com. I would love to talk to you. Thank you guys, and God bless.